Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://www.morningdownload.bu. Subscribe. Let's dive right in. In today's episode, we'll cover the rise of stocks and the plummeting of Bitcoin, the discussion of jobless claims, the overall state of the stock market, the decrease in jobless claims in the US, and the increase in CEO exits, the rebound of stocks, the surge of tech companies like AMD and Nvidia, the rise of Taiwan Semiconductor Manufacturing Co., the decline of Bitcoin, but experts predicting a target of $50,000, the addition of Dogecoin on an Indian exchange, and the expected jump of XRP, the EU imposing stricter crypto rules, the use of commodities as real assets for short-term investments that are not linked to equity markets, and the idea that the stock market story is driven by cycles and human behavior causing overreactions.
Last week, we saw some interesting trends in the economy and news. On the bright side, the number of Americans filing jobless claims dropped to levels not seen since September 2022. About 187,000 initial claims were filed, which is a decrease of 16,000 from the previous week. This is a positive sign for the labor market. However, on the flip side, CEO exits reached a new high in 2023. There were a total of 1,914 CEO changes last year, which is double the number recorded in 2022. This is the highest level since 2002, when these figures started being tracked. The previous high was recorded in 2019, with 1,640 CEOs exiting their positions. What does all this mean? Well, it's a mixed bag. The labor market appears to be solid right now, but the tech and other industries laying off workers could potentially have an impact in 2024. We'll have to keep an eye on these developments. In other news, mortgage rates have dropped to their lowest level since May, which is great news for prospective homebuyers. However, new home construction saw a decline in the last quarter of 2023, so it's important to monitor how this trend evolves. On the global front, Google is reportedly preparing for more layoffs, following in the footsteps of Amazon. Additionally, Red Sea attacks are proving to be a bigger issue for the supply chain than the pandemic. These are significant challenges that businesses will need to navigate. Lastly, U.S. executives attending the Davos conference seem to be optimistic about a Trump victory in the 2024 elections and see no cause for concern. It will be interesting to see how this unfolds in the coming years. Let's dive into yesterday's market movements. While stocks made progress, Bitcoin faced a significant setback. Now, onto the details. First up, let's talk about the job market. The number of Americans filing initial jobless claims dropped last week to levels not seen since September 2022. This suggests a solid labor market. However, with layoffs occurring in the tech and other industries, things might change in 2024. In other news, CEO exits hit a record high in 2023, reaching levels not seen since 2002. This could indicate some turbulence in executive leadership across various industries. Now let's shift our focus to the stock market. Tech stocks played a vital role in driving the market higher. Both AMD and Nvidia hit all-time highs, reflecting continued investor faith in AI. Additionally, Taiwan Semiconductor Manufacturing Co., the largest chipmaker globally, saw a remarkable 9.8% jump in its stock due to excellent earnings. This pushed the VanEck Semiconductor ETF, SMH, to an all-time high with a 3% increase. Apple and Boeing also had notable performances. Apple experienced its best day since May 5, 2023, following Bank of America's upgrade and buy rating, along with a predicted 20% upside. Despite this positive news, Apple faces criticism for recent App Store rule changes. However, they managed to avoid a ban by selling the latest Apple Watches without the blood oxygen feature. On the other hand, Boeing saw an increase in stock after announcing new orders from India's Akasa Air. That said, investors should stay cautious as more challenges may emerge. Lastly, keep an eye on Disney, as Peltz's Trian Fund Management plans to launch a dense white paper advocating for the addition of Peltz and former Disney CFO Jay Rasulo to Disney's board. This could potentially lead to changes within the company. Bitcoin took a tumble recently, dropping by about 20% from its recent highs. Just a few days ago, the cryptocurrency hit a 52-week high, of $49,021. 87, but it has since fallen under $41,000. Interestingly, there have been significant inflows into new spot Bitcoin exchange-traded funds, ETFs. However, these inflows have been offset by outflows not only from Grayscale Bitcoin Trust, GBTC, but also from other global Bitcoin-related exchange-traded products, ETPs. Experts remain optimistic about Bitcoin's future, though, predicting a target of $50,000 or higher in the coming months. While Bitcoin experiences its ups and downs, there are other cryptocurrencies making moves as well. For instance, Dogecoin has just been listed on FlipPay, an Indian exchange. This development might cause the price of Dogecoin to soar. Additionally, XRP is expected to experience a substantial jump. After a correction, it is anticipated that XRP could increase by as much as 500% to $2.8. However, it's worth noting that an XRP ETF is not currently on the horizon. Meanwhile, in Europe, there have been changes on the regulatory front. The European Union and the Parliament have agreed on stricter due diligence rules for crypto firms. This decision aims to bring more accountability and security to the cryptocurrency market in Europe. Investing in commodities can be a great option for those interested in short-term investments. Commodities are real assets, including natural resources like oil, agricultural products, natural gas, and precious metals. They provide a way for investors to protect against inflation. One important thing to note is that investing in commodities doesn't mean you have to buy and hold physical assets like a ton of rice or barrels of oil. There are other options available. You can trade futures, invest in exchange-traded funds, ETFs, or consider stocks of commodities producers. These alternatives allow you to participate in commodities markets without the hassle of managing physical goods. However, depending on the commodity, it may be more appropriate to own physical assets. This is particularly true for precious metals like gold or silver. Physical ownership can provide a greater sense of security and control in these cases. While commodities investments are generally considered secure, it's important to keep in mind that they don't always offer high returns. Some commodities like rice and natural gas can have highly volatile prices. So if you're considering investing in commodities, it's essential to carefully evaluate the potential risks and rewards. Today's quote of the day comes from Seth Klarman, a well-respected investor and contributing guru to the financial world. He said, "The stock market is the story of cycles and of the human behavior that is responsible for overreactions in both directions." And boy, isn't that the truth. The stock market is like a wild roller coaster ride, constantly moving up and down. It's influenced not only by economic factors, but also by the actions and emotions of us humans. Sometimes we get too excited and buy like crazy, causing prices to shoot up. Other times, fear takes hold and we panic, leading to massive sell-offs and market crashes. It's interesting to see how our behavior plays such a significant role in the stock market's ups and downs. We tend to get carried away with trends and follow the herd mentality, often making irrational decisions based on emotions rather than facts. These overreactions can create opportunities for both gains and losses. It's all part of the game, so next time you're watching the stock market go crazy, remember Seth Klarman's words of wisdom. It's the interplay between cycles and our human behavior that drives these overreactions and shapes the stock market story. Stay rational, my friends, and keep your emotions in check. Happy investing.
In this episode, we analyzed the overall state of the stock market as stocks rose, Bitcoin plummeted, and jobless claims were discussed, while jobless claims in the US decreased and CEO exits reached new highs. Additionally, we looked at the rebound in stocks, with tech companies like AMD and Nvidia reaching all-time highs, and Taiwan's semiconductor manufacturing co surging. We also discussed the current state of cryptocurrencies, including Bitcoin's decrease, but experts' prediction of a $50,000 target, the live listing of Dogecoin on an Indian exchange, and the expected jump in XRP. Lastly, we explored commodities as real assets for short-term investments, which are not linked to equity markets and can be traded through futures, ETFs, or stocks. And as Seth Klarman reminds us, the stock market story is driven by cycles and human behavior, causing overreactions. Thanks for tuning into the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at Morning Download. Subscribe.